Robert's consistently one of the top loan originators nationally, the top 10 at Marcus Millichap Capital Corporation, and a large percent of Robert's business is hospitality. He's sourced in excess of $2 billion in commercial debt, and is currently the number one producer of any type in the state of Florida for Marcus. So, Robert, thanks for being here to relay some insight into the capital markets and take it away.
A segue from Ann's presentation. By the way, Ann, that was a great presentation on the servicing. I'm getting a lot of clients that are contacting me about CMBS loans, and a lot of them are having servicing issues. And I actually have done a lot of CMBS loans last year for hotels. But another point that she did mention that I just want to hone in on a little bit is that, we have to be careful when we're requesting the forbearance to not cross into the cash management triggers, because once you go into the cash management, it really can be a pain. And it's something that it's going to be hard to get out of, and you don't want to get in there unless, there's a dire need. So you have to weigh those, you have to weigh the loan amount, whether it's worth it, look at the loan size. There's 4 main ways to get hotels financed. And we could start with CMBS. No surprise that CMBS is on pause. They were on pause for all product types, but recently they did open up for pretty much everything except hotels. Last year, about 30% of hotel volume came from CMBS, and CMBS is the primary non-recourse lending arm for hotels. So, when you start talking about $20, $30 million hotels and small funds, a lot of them kind of depend on CMBS. So it does take away a lot of liquidity out of the market. It's not certain when they'll open back up. Right now, there's about $9 billion in CMBS loans that are waiting to securitize. So these loans have already been funded by the lenders. Whenever the pandemic started, the securitization stopped, and there's about $9 billion that are waiting to be funded. Now they are signing up deals, but for like some retail, mostly multifamily, industrial. The next one is the SBA and 504. For the SBA 7A, that is the only option right now for getting hotels financed today. I guess the only option that's readily available. And most of the national SBA lenders have told me that they're on pause. So if you are looking for an SBA loan, it's something where you would have to go out to that market and market to a lot of the local banks that are going to do the SBA 7As. The 504 loans, we're not there yet, just because a lot of the commercial banks, which are on pause, I'll talk about next, a lot of the commercial banks, they take about 50 to 60% of the ownership to each loan. So the 504 is not there, but I will say that once you start to see a lot of these commercial banks doing 504 loans, that is when I believe is kind of a segue for the conventional financing. Because once lenders start getting comfortable with taking some exposure on these 504 loans in a widely marketed basis, then we're going to start to see a lot of the conventional financing open up. Right now, I had not seen that. There are specific deals that do get financed and they can get done. There are some hotels right now that are occupying, 40, 50% of rooms. So those specific properties are a little bit easier. And we're going to talk about potential candidates for financing in a second. The next financing arm would be bridge lenders and funds. In general, bridge lenders, I would say maybe 40% have stopped lending or on pause, or they're having funding issues themselves. With the remaining 60%, they are lending, but they're lending with lower LTVs and higher rates. So there's nothing worse than having a bridge lender that has even higher rates and a lower LTV. You really only use these bridge lenders during a time like this when you need to. So I'm not doing that many bridge loans, but some of them do get done. They are out there, and they're looking for hotel deals. They'll tell you, but their rates are going to be high with 9, 10, 11% rate, 2% on the origination fees, and they're going to have a lot of structure to it. Lower LTV is in 60%, maybe in the 50s. It just depends. The commercial banks we kind of talked about. Commercial bank financing is on pause. The nationwide banks, I would say, are the most conservative in terms of everything: multi-tenant retail, single-tenant retail, even some multifamily. But nationwide banks have pulled back, tremendously. The local banks is where a lot of this financing is taking place. I've got some recently closed deals that we're going to discuss. We can go to the next slide, timeline for increased lender appetite. I'm not going to spend a lot of time, but in order for the appetite to get better with lenders, no surprise, we're going to need something to happen. Not all of these options have to happen. We're going to need, obviously a vaccine, but that's not going to happen for some time. But we're going to need nationwide occupancy to improve, convention center business to pick up, new cases to drop. A lot of these things have to happen. With the convention centers, there's a lot of hotels that most of their revenues come from convention centers. So we can actually already go to the next slide. This kind of goes into the underwriting factors for new loans. They're going to look, a lot of these lenders, when hotel financing does open back up, they're going to look to concentration risk, diversification amongst revenue stream. They're going to look to, concentration to a park or destination like Orlando. I'll tell you, Fannie Mae 2 days ago just flagged Orlando as a pre-review city. So any deal that happens with Fannie Mae, it gets delegated at 65% LTV versus 75. Now we can still get 75, but it just goes to show you that even Fannie Mae is pulling back in certain cities. The borrower background, I think, when lenders are going to start underwriting on this, is going to be even more important. They're going to look to your portfolio and try to examine, are there any big cash flow drains that they have to worry about? So just be mindful when showing them that. The borrower experience, they're going to look for good liquidity. In some cases, I think with the borrower experience, they might like this, a buyer or someone that's refinancing that, is maybe a doctor or a lawyer or something that only has 1 or 2 hotels, that's looking to do something. At the same time, they also are looking for someone that's experienced, that doesn't have a lot of exposure. So I would say that it could go both ways with the borrower background. Historical performance, I think, if you're planning on selling or you're planning on refinancing, you have to be careful about how you report this 2019 tax return. I know everyone wants to get a refund, but reporting a massive loss and over deducting expenses, we have to be a little bit mindful, because everyone is going to put so much importance on that 2019 tax return. They're going to use that as a basis of your best case scenario for normalized returns, and they're going to apply a cushion on it. So they're going to say, if 2019 revenue or 2019 income was this, we'll take 75 or 50% of it. So just be mindful as you're doing your 2019 returns, if they're already done, or if you're planning on turning them in. Pandemic insurance, a few lenders have mentioned this, but I'm not sure how much traction this will gain. I hope not a lot, but I can imagine how expensive it'll be. But it's just something for us to pay attention to, that I could see a CMBS shop, or whenever things start getting bad, I could see a national bank saying, "Oh, well, we'll do hotels, but you have to have pandemic insurance." When a vaccine comes out, there, I could see a lot of lenders saying, "What happens if this happens again?" Even though we know it's something that happens once in a century, but a lot of lenders are going to have difficulty accepting that. So something for you to pay attention to as we go through this.